Let me ask you something. What does life insurance do? Most people, most agents, will tell you the same thing: it pays out when someone dies. And they're right. That is what basic life insurance does. But here's what almost nobody knows. Inside many life insurance policies right now, policies your clients already own or are about to buy, there is a benefit designed to pay out while the policyholder is still alive. It's called a living benefit. And it changes everything about this conversation. To understand why this benefit exists, you need to know where it came from. Because this isn't a marketing invention. It's a response to a real human crisis. It's the mid-1980s. The AIDS epidemic is devastating communities across the country. Thousands of terminally ill people have life insurance policies. Policies they've paid into for years. But the money is locked away, unreachable until death. They needed help now. Not later. A workaround emerged. Terminally ill policyholders began selling their policies to third-party investors at a discount, getting cash now in exchange for signing over the death benefit. These were called viatical settlements. It worked. But it meant giving up ownership of your own policy to a stranger. Insurance carriers saw what was happening and asked a better question: why should a policyholder have to sell to a stranger at all? By the early 1990s, carriers began building a direct solution into their policies. They called it the accelerated death benefit, letting policyholders access a portion of their own death benefit directly, while still alive. Then came the defining moment. On August 21, 1996, President Clinton signed the Health Insurance Portability and Accountability Act, HIPAA, into law. Buried inside that legislation was a game-changing provision: living benefit payments from life insurance policies are exempt from federal income tax. That same year, the NAIC, the National Association of Insurance Commissioners, published a model regulation giving states a template to govern these benefits consistently across the country. So this isn't new. This isn't experimental. Living benefits have been built into policies and protected by federal law for nearly 30 years. Now let's talk about why it matters so much right now, today, in the families you're going to serve. Here's why this conversation matters at scale. Look at these numbers, and I want you to really sit with each one. Roughly 6 in 10 American adults are currently living with at least one chronic disease. That's the CDC. Not a projection. Right now. And roughly 4 in 10 adults are managing 2 or more chronic conditions simultaneously. These aren't rare edge cases. This is the reality of millions of households across the country. About 4 in 10 people will receive a cancer diagnosis at some point in their lifetime. American Cancer Society. That means in the average family, in most families, someone will face this. 7.4 million Americans are currently living with Alzheimer's dementia, according to the Alzheimer's Association's own 2026 Facts and Figures report. 7.4 million. That's more than the population of many U.S. states. These are broad population figures. They show how widespread serious illness is across the families you'll serve, not a prediction about any one person. We present them because they reveal the scale of need and the scale of opportunity to help. So what actually happens when someone needs to use this benefit? Let me walk you through the claim process step by step, because this is the conversation you will have with your clients. Step 1, a qualifying diagnosis occurs: a chronic illness, critical illness, or terminal diagnosis depending on the policy writer. Step 2, the attending physician certifies the diagnosis in writing. Step 3, the claim is filed with the insurance carrier. Step 4, the carrier reviews the claim and, if approved, the living benefit is paid directly to the policyholder. Tax-free under HIPAA. That's it. 4 steps. There's no complicated process to memorize. Diagnosis, certification, claim, payment. Your job is to make sure the policy is in place before it's needed, because you cannot file a claim on a policy that doesn't exist. Before we go further, I want you to stop for just a second. Think of someone in your own life who has dealt with a serious illness. A parent. A grandparent. A sibling. A friend. Someone who went through cancer, or a stroke, or a long illness that changed everything for their family. How many people came to mind? Almost everyone does. That's not a coincidence. That's the world your clients live in. And now you have something to offer them that most agents don't even know exists. You now know something that most agents, don't. Living benefits exist. They're federally protected. They're built into policies right now. And they are the conversation opener of your entire career at Providence Life Group. Head into the full written training below. Read it carefully. Then complete the Class 6 quiz to unlock Class 7. Let's go.